I think we're heading into a really massive crisis here in the West in many ways. The dust up between Israel and Iran, that's not over by a long shot. And there's a bunch of other places in the world that are time bombs waiting to go off.
Our next guest has argued that a greater depression may be upon us. What does this look like? Are we entering the stages now? What is unraveling with Trump's policies, and how will these policies affect not just corporate America, but our investments? Doug Casey joins us once more. He is a best-selling author of Crisis Investing and The International Man. Recently, he's published a new book called The Preparation. We'll talk about that. He's also the author of a number of other works, including his series on Charles Knight, the fictional character who's gone through several different phases in at least 3 different books. So we'll talk about some of that. Thank you very much, Doug. Welcome back to the show.
Well, it's always good to be here with you, David. I'm not in Buenos Aires at the moment, which is where I usually am. Uh, I'm on the shores of the Chesapeake Bay in Virginia because it's summer here and it's winter in Buenos Aires. So uh, time to fly north.
How are you liking it now? I remember speaking to you last time you were in Argentina, and we actually talked about Argentina briefly. So good to have you back in the U.S. Are you liking the transition?
Yeah, well, I go where the weather suits my clothes, which is to say, I like summer. But as far as Argentina is concerned, I've been a huge supporter of Milei's policies because, as all the world knows, he's the first anarcho-capitalist in world history to have won a national election. And by an anarcho-capitalist, I mean somebody that does not believe in government as an institution and has been doing his best to disband the Argentine government, which has been pathological for the last 80 years. So Argentina is looking quite good, much, much better than it was before Milei was elected. I'm very happy to have made a big bet on Argentina some years ago. It's paying off because he's upsetting the entire political and economic uh, superstructure of
I-
Argentina.
In which way can the West learn from Milei?
Well, you've got to attempt to totally abolish many regulatory agencies and fire all the people that live there. And when I say abolish, I don't mean cut back. I mean pull them out by their roots and sow Agent Orange where they grew. Because most of the infrastructure of government serves no useful purpose. Well, that's understating it, is corrupting and destructive of capital and holds down entrepreneurialism and production. So Milei is in the process of changing Argentina from a country that was modeled by Juan Perón after Mussolini's Italy, a genuine fascist country where the state and corporations are hand in glove together, and he's trying to free marketize it. We'll see if he wins the elections that are coming up in a couple of months to see if he can take over the Congress. Right now, he's like Trump, doing a lot of things by executive order, which is kind of risky. What he needs to do is change the laws. So if he wins the elections in a couple of months, Argentina is going to totally overturn its past sordid 80 years of history. You know, it used to be one of the 3 or 4 most prosperous countries in the world 100 years ago. Now it's just another third world country. So
Well,
anyway,
turning
Argentina.
to turning back to the rest of the world in the U.S., how close or far away are we to this greater depression that you've been talking about, given Trump's policies? I believe we spoke just after the inauguration or shortly around that time. And so a lot has changed, a lot has developed. How would you evaluate the last 9 months or so? And are we closer or farther away from this greater depression?
Well, Trump is a mixed bag. Uh, there are some things that you have to love about him, and some things that are really stupid and destructive. But let me say this. It's that given a choice between Trump and Kamala, there was no choice. The U.S. was sliding downhill to become a highly regulated, highly taxed socialist state, and something had to be done. Trump was not the optimal solution, but thank God we dodged the bullet with the Democrats and Kamala. The thing that worries me most about Trump are his tariffs, which amount to a gigantic tax increase on the American public. Because, of course, tariffs are something that importers pay, which is to say the residents of the U.S. pay. And not only is it hurting the average, his tariffs are hurting the average American, but they're hurting our partners that we trade with. So I understand why Trump put on the tariffs because he's trying to bring manufacturing back to the U.S., but he's trying to bring it back in an artificial way. He's creating another distortion in the economy. And to answer your earlier question, the Greater Depression, yeah, we're on schedule for that. A depression, you'll recall, is a period of time when most people's standard of living drops significantly. And you can argue that that's been going on for some years because the state in the U.S., the government, has been growing and growing and growing at the expense of the private economy. And these 2 trillion or even $3 trillion a year deficits that the government is running is coming directly and indirectly out of the pockets of the American people. So, yeah, the answer to the question is we're headed for something that is going to be much worse and much longer lasting and much different than the unpleasantness of 1929 to 1946. I know that's a radical statement to make, but and there are things that are ameliorating that trend, which we could talk about. But I'm not very sanguine about any of the markets in North America today, with one exception, the resource market, which is where you are in Vancouver.
You've heard me talk a lot recently about rising gold prices and how important it is to be building your savings in hard assets like gold and silver. But what if I told you that you could do a lot more than just holding gold? What if you could also earn income from it paid in gold? That's exactly what today's sponsor, Monetary Metals, is doing. They're revolutionizing how people invest in gold and silver. Instead of paying to store your metal or watching it sit idle, now you can get paid to own it. Right now, in the marketplace, you can earn up to 4% interest on gold paid in gold. That means your holdings grow in actual ounces, not dollars, on top of any price appreciation. Interest is paid monthly in physical gold, which you can redeem and take delivery of. Thousands of investors are already earning real interest in physical gold and silver through Monetary Metals every month. It's time you did as well. Go to monetary-metals.com/Lin, link down below, or scan the QR code here to learn more and get started.
Yes, that's right. Capital of mining. Yes, we'll talk about the resource sector and also your Greater Depression thesis in just a bit in more detail. I want to play for you this clip. It's an interview with an expert on China relations. His name is Victor Gao from 60 Minutes Australia. This references your earlier statement and remarks about manufacturing, bringing manufacturing back home. This is what he had to say. Take a listen. We'll react together.
Do you accept that Mr. Trump is trying to protect his businesses and jobs?
No. First of all, the maximum tariff against the rest of the world, including against China, will not move manufacturing jobs back to the United States. If President Trump is serious. President Trump needs to talk with China because China has been the most successful manufacturing country in the world today. China's manufacturing output is larger than EU, US, Japan combined together. And China produces about 6 times more power for industrial use than the United States does. So if President Trump is serious about recreating manufacturing jobs in the United States, he needs to do several things. And I offer this advice without charging him a penny. He needs to build up connectivity, build up container ports, build up high-speed railway, build up high-quality highway system, for example, build up inner river transportation. And he needs to increase power generation like crazy. He needs to at least double the power capacity in the United States to really achieve meaningful amount of manufacturing jobs back to the United States. He needs to train the American people. He needs to instill this discipline and work ethics which will enable the great people in the United States to work in factories which need to be competitive, which need to have the marketability not only in the US market, but in the global market.
Okay, I'll stop there. I mean, notwithstanding the fact that the U.S. already has the most sophisticated infrastructure in the world, but what about his other remarks? What of it?
I agree 100% with Mr. Gao. It was Mr. Gao, wasn't it?
Yes, Victor Gao, yes.
Yes, everything he said is quite correct, with one critical exception. He seems to be looking for Trump to do these things. America could be competitive with China, but not by putting on tariffs, but by freeing itself up. And that's not something Trump can do by doing things. The way for America to win is by getting the government out of people's hair. So Trump doesn't have to actively do anything. What Trump has to do is follow the path of Milei in Argentina and abolish regulations and get rid of taxes. That is what will make America as competitive as China, if anything will. So he's right, but his solution is a little bit off kilter. Trump should not be doing actual things. Like, look what Trump's doing, taking 10% of Intel Corporation, having golden shares in U.S. Steel. This is economic fascism. He should be disinvolving the U.S. government from the economy as opposed to involving it more deeply. Incidentally, my first novel, Speculator, has just been published in Chinese. I don't know if you can see it.
Yes.
I'm not marketing it, but I agree with Mr. Gao's analysis in many ways, though.
Well, what is economic fascism? Are governments not, in theory, allowed to or supposed to be participating in the free markets by buying shares of a company or suggesting some sort of partnership whereby, in this case that you mentioned, the company will provide a certain revenue? I think NVIDIA will give a certain revenue of chip sales to China to the U.S. government in exchange for access to the U.S. markets, I guess, in perpetuity.
Yeah, this is exactly the opposite of what the government should be doing. Look, what should the government be doing? The government is a coercive power. It's a dead hand on the economy. So what should the government do? Since the government is force, it's coercion, that's the nature of the state, it should do nothing but protect people from force and coercion. What does that mean? It means a military to protect the citizens from coercion from abroad, police to protect them from criminals and coercion in the country, and a court system to allow them to adjudicate disputes without resorting to force. And it shouldn't do anything else. It shouldn't have any involvement in the economy. The result of government involvement in the economy is creating distortions, which lead to a depression eventually, and corruption, as government officials find ways to enrich themselves. So he should be doing kind of the opposite of what he's doing and get rid of his shares in U.S. Steel and NVIDIA, or whatever else. But he's going just the opposite way. So the long-term prognosis for what Trump is doing is not good, but a lot better than what it would have been if Kamala had been elected.
The idea here is that maybe there's short-term pain, meaning some shareholders might not like this idea. Actually, NVIDIA shares haven't really declined much on this news, but that's a different story. I know personally several people who have struggled with their import-export businesses because of tariffs, had to lay people off and whatnot. The idea here is that there's short-term pain for long-term gain, meaning potentially this could revitalize American manufacturing, bring back jobs, reinvigorate the overall labor force
David,
long term.
the way to invigorate the U.S. economy, as I said, is not by putting on tariffs, which hurt the American people as well as our foreign trading partners. The way to solve the problem is by deregulating the U.S. economy and radically cutting taxes as well, and radically cutting government spending so that you can cut taxes. In other words, freeing the American economy up. He's doing just the opposite, I'm afraid.
What should that process look like, Doug, if you were to instill these policies yourself, if you were the president and you had to, by constituents' orders, make America freer, make America greater again, what would you do?
Well, one thing that Trump has done, which is absolutely wonderful, is abolishing USAID, which was spending, how much was their budget? $40 billion a year, gigantic. So he's abolished that agency, which was just a giveaway scheme to transferring money from, well, like all foreign aid schemes. That's basically what USAID was, taking money from poor people in a rich country, America, and giving it to rich people in foreign countries. USAID was full of corruption. Now, what he did to USAID should be done throughout the US government. All those buildings in Washington, D.C. should be emptied, and the people that are working in them should find something productive to do in the real economy. That's what I would do.
Okay. This also leads to ultimately your book, The Preparation. The training of the labor force starts at the education age, which is something that your book addresses in detail. So the standard procedure is finish high school, go to college, get a job, perhaps get a master's degree, go back to the workforce, rinse and repeat. Is that the way
Yeah,
forward?
yeah, that is no longer. Once upon a time, like 50 years ago, that was arguably a formula for success. Get a college education. But the world has changed. And even 50 years ago, when people were getting a college education, it was marginal. But today, college is going to college can bankrupt you. But that's not the real problem. The fact that most kids get out of college with a huge albatross of debt around their necks. The real problem is that college isn't just a neutral experience. It's no longer a positive experience. It's you're jumping into a cesspool. Most of the professors in most colleges today, it's unbelievable, but it's true, are woke or Marxists or worse. So college is a corrupting influence. A young man will go to college for 4 years, which is really like extended adolescence these days, kind of living in luxury. I'm not talking, incidentally, about going to college for STEM courses, science, technology, engineering, math. That's different. A formal, structured environment can be very beneficial for those things, medicine, law. But most people don't take these things. Most people take liberal arts. And what I'm suggesting is during those 4 years of time, a young man do something that we call the preparation. What we've done in this book is we divide the 4 years, or after you graduate from high school, into 16 quarters. And in each of these quarters, you set a task for yourself in addition to the academic studies, which would continue. I'll tell you how. Like over the course of the 4 years, when most people just sit in a desk and listen to lectures and a lot of time cut their classes because they've been out partying the night before. I'm speaking from my own experience, having gone to college, and I think most people's, or falling asleep in class, or taking bad notes, or letting their mind wander when the professor is talking. If the professor's any good and you don't just have a substandard teaching assistant. So we've solved that problem, I think, with the way we would deliver courses. But young men want to go out and do things, not be lectured to. So when they take the preparation, you'll learn, like for instance, you might go to Florida for 3 weeks and learn to drive heavy equipment. Does that mean that you're going to be a heavy equipment driver? No, but you'll know something that very few other people know how to do. You'll spend a month in Maine learning how to build a house so that you'll learn how to be an electrician, a plumber, a carpenter, to a apprentice level anyway. These skills will last you the rest of your life. You'll learn to fly a plane in Alaska. You'll go to Thailand for 3 months during one of our quarterly cycles, we call them, and take martial arts, Muay Thai, so that every young man should know how to handle himself if things get rough. So that at the end of 4 years, when most people might just have a degree, you'll already have broad experience in many subjects all over the world. The idea is to become a Renaissance man, David. Everybody should attempt to be a Renaissance man, what the Italians of those days called an homo universale, a universal man.
This sounds like a good system, a good alternative, and I don't think anyone listening would disagree with you that a lot of college courses that we took are not even in the frontal lobe of our memories right now. But when we even talk about this, take a look at this stat. I mean, we say this, but there is still, according to labor statistics, a correlation between higher education and income, even today, which persists. And people look at this as justification for investing in 4 years of a college degree. So look at this. Less than a high school diploma, your chances of unemployment, the unemployment rate is 6.2%, and it goes down dramatically as you progress through the higher education tree.
That's confusing cause and effect. The reason why college graduates earn more than people that don't have college educations is because they're smarter. That's why they went to college. So, of course, people that are brighter are going to do well, but it's not because of college. It's because they're naturally more enterprising and have higher IQs. But they're misallocating that time in college. You get out of college, you're burdened by debt. You've picked up lots of bad ideas from your professors who are trying to indoctrinate you with woke ideas, which have totally conquered academia. So the cause and the effect are confused with that. You don't earn a higher income because you went to college. You're earning a higher income because you're brighter typically, but you shouldn't waste that intelligence. With the preparation, we suggest that it's possible to get both a Bachelor of Arts degree, where you're learning history and English, basically. These are the two main things, but skipping things that they're trying to indoctrinate you with in college, like sociology, psychology, political science, and so forth, by taking courses from MIT and Oxford are two universities that offer free courses online. And I like the teaching company, especially because they've rounded up world-class professors who give command performance lectures that are very entertaining, and you can listen to them numerous times to learn a subject. So at the end of the preparation, which is 4 years, in addition to doing all these fun things that we just talked about, you'll have the knowledge of a BA. You'll also have the knowledge of a BS, taking a Bachelor of Science by taking courses online
Sure.
in physics, chemistry, biology, astronomy. And on top of that, because even if you have a Bachelor of Science and a Bachelor of Arts from a college, very valuable knowledge, but no practical application when you're looking to get a job. That's why we have 4 quarters devoted to what you learn in an MBA: marketing, sales, business administration, accounting, law, which most college graduates know nothing about. So we're cramming a lot into this time, these 4 years. But those 4 years are among the most valuable in your life. You're like a sponge, and you should be absorbing all the knowledge and all the experience that you can. Look, I'm of the opinion that once a young man gets out of high school, he should go on what Joseph Campbell called a hero's journey. Challenge yourself. Do things that other young men are not doing. And that's what this book is all about.
I want to play for you the skit to end this conversation on this segment, and before we move back to the economy. This is I'm not sure if you're aware, Father Guido Sarducci. It's a fictional character by the comedian Don Novello in the 70s. Yeah. Okay, he has a what he calls a 5-minute university. I'll just play a minute, and then this is comic relief here.
I got this idea for a school I would like to start. Something called the 5-minute university. And the idea is that in 5 minutes, you learn what the average college graduate remembers 5 years after he or she's out of school. With the cost of like $20. That might seem like a lot of money, $20 just for 5 minutes. But that's for like a tuition, capping and gown rental, graduation picture, snacks, everything included. Say if you want to take Spanish, what I teach you is ¿Cómo está usted? That means how are you? And the answer is muy bien, means very well. And believe me, if you took 2 years of college Spanish, 5 years after you're out of school, ¿Cómo está usted? Muy bien, about all you're going to remember.
Anyway, that's just what you were saying just reminded me of this.
That's very good, David. And there's a lot of truth in that. That's why it's funny, because it's true.
Yeah, I know. I've been to college. All right. I want to turn back.
Me
Yes.
too. If I'd had this damn book when I got out of high school, it would have accelerated my life. It would have put it on steroids. But I didn't have any guidance. Nobody was thinking about that. They all want you to go to college and become an organization man to be employed by somebody else. And the end phenomenon of the preparation is that you're ready to be an entrepreneur and employ other people, not be employed as a middle manager. So
sure. I mean, some people look. I think your system is good for some people, but I've observed that the majority of people don't want to be entrepreneurs, and they want to be an organization person, for right or for wrong. And the society can't function if everybody's an entrepreneur. Entrepreneurs need to hire people to work for them. So, maybe that college institution is still relevant for most people.
For some people, yeah, but you're quite correct. But there's a better alternative that I think would, not for everybody.
Sure.
Nothing's for everybody. College itself is not for everybody. So, yeah, you're right. But
let's turn back on the economy, and I want to just address the Greater Depression that you were talking about earlier, and in particular, let's take a listen to what Jerome Powell had to say at the Jackson Hole Symposium last week. This is a clip where he highlighted some of the challenges that the economy is currently facing. I'm just curious if you agree with him or not. Take a listen.
The economy has faced new challenges. Significantly higher tariffs across our trading partners are remaking the global trading system. Tighter immigration policy has led to an abrupt slowdown in labor force growth. Over the longer run, changes in tax, spending, and regulatory policies may also have important implications for economic growth and productivity. There is significant uncertainty about where all of these policies will eventually settle and what their lasting effects on the economy will be.
Okay, can you evaluate what he just said?
Yeah, the way I would read it is that he sees that there are a lot of distortions, economic distortions and misallocations of capital that have been cranked into the economy in good measure because of the Federal Reserve, our central bank, for many years. And if they're unwound, it's going to unemploy a lot of people and bankrupt a lot of businesses. So he's worried about that, of course. That's how I read between the lines of what he said.
Should he be worried? Is that a legitimate worry at this
Yeah,
point?
it's a legitimate worry. Of course, as you know, David, I would go further and I would say that the Federal Reserve should be abolished. It's really nothing but an engine of inflation. It's only been around for the last 100 years or so, and we don't need a central bank. Everybody's got one, but it's just another way for the government to indirectly tax the citizens of the country
How
by
would the country
destroying
work
the
without?
currency, in effect.
Let's explore this idea further. By the way, you're not the first to talk about abolishing the Fed. Ron Paul, for example, is an advocate of abolishing the Fed. But anyway, how would the system work, theoretically speaking? How would a country govern itself monetarily without a central bank?
The way the U.S. did before 1913, when the Fed was created, you would need a sound money. That would mean a commodity money that can't be created out of thin air. Gold would be ideal. Perhaps in the years to come, it will be joined by Bitcoin, which I've been a fan of since 2017 anyway. You don't need the Federal Reserve. The way a bank historically has worked is people put their money in a bank for a period of time. The bank consolidates small deposits, pays 3%, lends them out at 6% to make up for possible losses and its profit margin. And that's the way the banking system works. Real capital as opposed to phony fiat money capital. The Fed serves no useful purpose. It does nothing but distort the economy by directing credit to politically favored institutions. So
You don't think that they have any role in controlling unemployment as well and keeping the unemployment rate low, which is one of their mandates?
no, as a matter of fact, it does exactly the opposite of that. By destroying the currency, it makes it harder for people to save money uh, and build capital. And capital is what you need to create wealth and employ people. They're making the country poorer. Look, one of the countries that I've spent a lot of time in happens to be Zimbabwe. And they have a central bank. In fact, it's the biggest building in Harare by far, their central bank. And by printing up hundreds of trillions of dollars, they didn't employ more people. They made it impossible to destroy more people. And the US is doing that. It's not as bad as Zimbabwe, quite obviously, because we have an immense amount of capital stored up in the US that we're living off of at this point. But at this point, what the US is doing is it's living off of capital that's been stored up in many, many decades before, and it's mortgaging itself for many decades of production into the future. So, yeah, we're heading for a really nasty depression. And the Federal Reserve is not the solution to the problem, juggling interest rates and juggling the fiat money supply. The Federal Reserve is one of the great causes of the depression. I know that's a shock. I know that comes as a shock to a lot of people to hear that because it's about the opposite of what they learned in college, uh, in the BS economic courses that are generally taught in universities today.
Former Fed Chair Janet Yellen actually made a joking remark that kind of mirrors what you said. Somebody asked her at a CFA event what causes recessions. I was there, I attended, I was in the audience, and she said two things cause economic recessions. Number one, economic distortions, or financial distortions were her words, financial distortions, and number two, the Fed. So there was an eruption of laughter from the audience. I think she was half joking. Anyway, I will.
Whether she knew it or not, though, she was quite correct in what she said. And
What should be done about this issue, though?
Janet did quite well for herself as Fed chairman.
Yes.
It was amazing that she was paid about, I don't know what it was, $10 million for speeches that banks gave her before she became chairman of the Fed to favorably incline her, I guess. Yeah. But that's very funny. You're right, David.
What should be done about this issue? July budget deficit up 20% year over year despite record Trump tariff income. The U.S. budget deficit rose 20% in July, while the U.S. saw a 273% increase, or $21 billion increase in customs revenue in July over the same period last year, mostly from tariffs. Overall, the Treasury recorded a record national debt and a higher deficit. The national debt now creeps up to above $37 trillion mark. What should be done about this?
The national debt is never going to be paid off. It's going to be defaulted on. And it can be defaulted on one of two ways. Either by not paying it, which would result in a deflationary collapse, or by printing up more money to pay it, which means that the US dollar is eventually going to be hyperinflated out of existence, which would be the ultimate catastrophe for the US. And the way to solve the problem is for the US government to radically cut its spending, which, as I said before, means abolishing wholesale lots of agencies in the government. Name them one after another. They all should go. Anything that these government agencies do could be done if it's needed by entrepreneurs in the free market doing things for a profit efficiently. So that's the only solution. You've got to get rid of the dead hand of government and free the country up, because we're devolving in the U.S. towards what China was 30 years ago. Well, before Deng Xiaoping freed it up. So actually, we're regressing.
Okay, let's finish off on markets now before we talk about commodities, and the resource sector, which is your preferred sector right now. Let's talk about the biggest sector, the hottest sector right now, which is AI. There's an MIT study that I like to point to your attention. MIT study on AI profits rattles tech investors, driving the news. According to researchers at MIT, 95% of organizations found zero return despite enterprise investment of $30 billion to $40 billion into Gen AI. The study says they studied 300 public AI initiatives to try and suss out the no-hype reality of AI's impact on businesses. Even firms that are now using AI are not seeing widespread disruption. Between the lines, companies that bought AI tools were far more successful than those that built internal pilots, however. So what they're saying here, my fear is that at some point people will wake up and say, all right, AI is great, but maybe all this money is not actually being spent all that wisely. You've criticized tech and AI as being in a deflating bubble, I believe were your words. Maybe help us make sense of this research that may or may not align with what you already think.
Well, you're quite correct again, David. AI is wonderful. It's, look, the printing press was wonderful. The internet was fantastic. The cell phone, the computer, all these things are fantastic. And AI could be the biggest thing of all. But there's a speculative bubble going on in the stock market and in spending by companies like Meta and Google and all the rest of them building these giant data centers. And I think this is going to be a classic example of the old saying, high tech, big wreck. So I'm all for AI, not not discounting its dangers to put us into the world of the Terminator.
You
To
know,
build.
I've heard the opinion, and I kind of agree, but I'll let you address this, that robotics will be the next multi-trillion-dollar industry following AI. After the software is more developed, I'm talking about the AI front. The next step is to put it in robotics that can do physical labor and things for us.
Absolutely, no question about it. I mean, this is all moving towards Ray Kurzweil's idea of the singularity, where all of these fantastic technologies basically come together in a few years. Bioengineering, AI, space exploration, robotics, nanotechnology. And as far as robotics is concerned, absolutely correct. I mean, it was only last week that in China they had a fair where they had how many hundreds of companies that are building robots. That it was an athletic contest. It was an Olympics for robots to see what they could do, play soccer, box, all this type of thing. So robotics is advancing more quickly than Moore's law. And we've all seen the videos from like Boston Dynamics here in the US. China's way, way ahead of the US, but Boston Dynamics is, I guess, our leading company. And they already have a robot that can operate independent. Look, in 5 years, in 10 years, as Elon Musk has said, everybody is going to have his own robot. That's the good news. The bad news is that the government's going to be replacing soldiers with actual, real, true to life Terminators. So there's a lot of dangers involved in this as well as opportunities.
Do you think at that point humanity will have an existential crisis? Many people will wonder what the relevance of them is if robots can do their jobs for them, if non-sentient entities can perform tasks that people do today.
Well, I'm not worried about unemployment in the long run. And why is that? Because every individual on this planet has an essentially an infinite desire for goods and services. So you can be employed right now or 10 years from now, 24/7, providing goods and services for your fellow humans. So unemployment is not a problem, and we don't need a universal basic income or any destructive nonsense such as that to solve the problem. But it, look, it's going to create a lot of changes, just like during the last industrial revolution. There were millions of people that were weaving cloth with hand looms in their cottage industries. They all lost their jobs. They had to go to the big cities and be reemployed. The same thing happened when the cell phone was invented. When the computer was invented, typing pools vanished, and all those basically women that were working in them had to do something else, and they did. So, people will adjust. I'm not too worried about that. I am worried about the financial markets, though, because it's the financial market is hugely skewed towards high tech, and pension funds and mutual funds and people's individual accounts are hugely skewed towards the Mag 7 high tech stocks. And if this AI boom goes bust, and it will, they're going to lose a lot of money. And then what are they going to do? Because they were looking at that money to pay their mortgages, to pay their car payments, to pay their student loans. So what are they going to do? They're going to go whining to the government, asking the government to do something, and the government will, something really stupid and destructive. So, yeah, yeah, we're heading into dangerous times. The Greater Depression is still with us, David.
Doug, what do you like in particular about the resource sector now, if the other sectors look a little bit frothy to you in particular AI and tech. Gold, as you know, has performed extraordinarily well in the last 18 months. It's at new all-time highs. Platinum, palladium have done, well, palladium in particular, skyrocketing this year. But are you still a believer in the metals at current prices today? In other words, if somebody who had not previously invested already were to say to you, Doug, maybe I missed the boat, what would you say?
Well, as you know, I've been a supporter of gold for philosophical reasons, like forever. I've been buying it since it was about $45 an ounce, and it's at all-time highs. So, I've gotten about 100 to 1 on my money. I've always used it as a savings vehicle, though, sometimes as a speculative vehicle. And to answer that question, should you buy gold now? Yeah, you should, because it's the only financial asset that's not simultaneously somebody else's liability. And it's a way to get out of fiat money, whether it's the Canadian dollar or the US dollar. They're all just toilet paper printed up at will by central banks. So yeah, you should buy gold, but for safety and security. Gold right now is priced where it kind of should be relative to the price of meals or clothes or houses. It's about where it should be. It's not underpriced anymore. But where I am putting money is into these crappy little mining stocks, development companies, exploration companies, and producers, because the producers are very, very profitable at the moment. The industry-wide all-in sustaining cost of mining an ounce of gold, it's about, say, $1,300 an ounce. But gold is about $3,300 an ounce. So miners are coining money, but the market doesn't care. So I own gold miners and I own gold developers that are working to put a deposit that they've laid out into production, as well as some explorers, which are on Easter egg hunts to find deposits. And they're very volatile. And in past bull markets over the last 50 years, many of these gold stocks have not just gone 10 to 1, they've gone to 100 to 1. And actually, some have gone 1,000 to 1 just in a few years. They're very volatile. They're as volatile as tech
Begs the
stocks.
question as to how you pick stocks. I mean, you don't have to give specific names if you don't want to, but what is your process? You were the one who addressed this to me and brought this to my attention. You said of the 2,000 or so junior miners out there in the universe of investable stocks, 95% of them are, in your words, crap. So how do you select the 5%?
Yes, that's an exact quote from me, and I think I'm quite accurate in that. Well, it's been an area of specialty of mine for many years. And in order to invest successfully in junior mining stocks, and it's not just gold, it can be, for that matter, coal and oil and platinum and copper, nickel. I've developed something called the 9 Ps, a little mnemonic to help you remember what you should look at when you're looking at a stock. First is the property. And in order to analyze the property, you should know a little bit, or maybe a lot, as you learn about geology and mining engineering. More important than that is the people. Who are the people in back of it? Have they been successful, or are they just stock promoters? Look at the paper. Where's all the stock? How much money is in the bank? The finances, spelled with a PH. So when you're looking at these companies, you can go down the list, but this is the type of thing that we emphasize in this book, the preparation, so that you're not a babe in the woods, even in the stock market. But yeah, it's a minefield investing in small resource companies, just like it's a minefield investing in small biotech companies or small computer companies or almost anything. And most people are unprepared for it. So what do? They give their money to BlackRock or somebody like that who take 2% of their capital every year to make the same mistakes that they probably make as individuals. It's perverse. I mean, the whole economy is a bubble today, greatly over financialized, but that's another tangent. I don't want to go off on that.
Right. Okay. So are you more inclined to invest in the gold space, silver space, copper and nickel and base metal space, or are they equally attractive to you now?
And don't forget uranium, because
Uranium. Yes, uranium.
yeah, because nuclear is, I've always said, is the safest, the cheapest, and the cleanest form of mass power generation. And the technology there is changing right before our very eyes. So it's like what Mr. Gao said. China has many times more electrical generating capability than the US does at this point, and nuclear is the only solution to that problem. So, what am I? I'm interested in all of them because all of these things are cheap. The stocks in particular. Nobody wants to own the stocks because, look, uh, mining is a 19th century choo-choo train business. I mean, you're out playing around in the dirt with big yellow trucks. So, of course, most of the younger generation doesn't want to, mess around with stuff like that. But if you want to have buildings or knives and forks to eat with or anything, you need the stuff that comes from mining. And then the NGOs will make your life miserable, and native tribes and all that will try to shake you down, and the government will try to shake you down. Mining is a horrible business. I recognize that. That's why I've always said it's a crappy business. Most of the stocks are crappy. But that said, that's all over discounted by how cheap the stocks are right now because of those things. So, yeah, I expect that if we talk, I hope, uh, in 6 months or a year or 2 years, the average mining stock, which is already perking up, and they're doing quite well, thank you very much. My The average stock might have gone already 5 to 1, even 10 to 1. I'm very, very optimistic about the prospects for it. It's the only cheap place in the market. Let me say that the only cheap place in the stock market is in mining stocks. They're close to the cheapest level in history relative to other stocks.
All right. So then, final question. You were a very well-known author, even in the 80s, for your work on investing during crises. Like I mentioned, you were the best-selling author of the book Crisis Investing. How can we apply some of the lessons from that book, which was first published in 1980, I believe, to the present day?
Well, the market always presents new opportunities, but things are a lot different now than they were back in the 80s. Uh, what are the lessons that we can look at? Look, I call that book Crisis Investing, partially because in Chinese, the symbol for the word crisis is a combination of the symbol for danger and the symbol for opportunity, and that is a crisis. So I think we're heading into a really massive crisis here in the West in many ways, economically, financially, socially, demographically, militarily too. Uh, this war between the Ukraine and Russia, it ain't over yet. And not to mention the dust up between Israel and Iran, that's not over by a long shot. And there's a bunch of other places in the world that are time bombs waiting to go off. Uh, so we're going to be living in a world of crisis. And the question is, you've got to build some capital and then you got to deploy it intelligently. And the only defense against what's going on is to learn as much as you can and develop as many skills as you can so that no matter what happens, you'll be able to land on your feet. Don't be a one-trick pony, not in today's world. You never should have been, anytime. But I think now more than ever. I guess that's the only general advice that I can give. Don't spend your time online watching funny cat videos. I mean, you should spend your time online trying to learn something that's going to improve your status in the world and thereby improve the world itself. By making yourself better, you make the world better.
Well,
That's the best type of altruism.
that's good advice. I mean, I haven't liked the cat videos, but I'll cut down on those. Thank you, Doug.
Yeah, I do too. We all do.
I like talking to you more than the cat videos, and I like reading your work more than the cat videos. So where can we read your work, Doug?
Well, look, people should buy this book. They're going to be very happy if they do, especially if you've got kids that are approaching college age. Or for that matter, if you're in a dead-end job and having a midlife crisis, you should buy this book. It's on Amazon, and I think you're going to be very happy with it. So I guess that's what I'd say. Listen, I hate to be selling something because I don't need to sell anything. I mean, I'm just fine. Life has treated me really well. But to me, it's kind of a good karma thing. And I'd like people to follow the instruction here because I wish I'd had this damn book when I was 18 years old myself.
I'd be curious to read a book that you wrote on how to prepare for investing. Retirement, not investing. Retirement.
Yeah.
I wonder if you've ever done work on that. I mean, the preparation is a book on how to prepare for the start of your career. How do you prepare then for the end of your career? I'd be curious to get your thoughts, but
I don't think that you should retire, David, because what does that mean? What are you going to do? Sit on the front porch and feed the pigeons or go fishing every day? I mean, I think it's incumbent upon all of us as individuals to be productive, to produce more than we consume. So you can consume more too. That's good. And you can't consume unless you produce. So I don't believe in retirement. Quite frankly, it's a trap to think you're going to retire. If anything, you should change your occupation and do something else that you might like better, that you might find more interesting, more stimulating. And that's why, actually, this book is probably even better for somebody who's 65 and wondering what to do with themselves than it might be for somebody that's 18. I don't know. It's the way I live my life, quite frankly.
okay. Well, good stuff, Doug. We'll put the links down below. So make sure to follow Doug at The International Man and also check out his new book. We'll put the Amazon link as well in the description. Welcome back to the show, Doug. It's always good to see you. We'll speak next time.
I look forward to it, David. Thank you.
And thank you for watching. Don't forget to like and subscribe.